This is the end of the one-way, largely downside, and a potential for some relief rally for gold and silver. But it does not mean that we are saying to you 100% back to moon, December calls at 20K are going to pay. We've already spoken at length about why people will sell far out of the money calls to get 90% of their capital back and have a much smaller margin hold when they have been writing calls at 4.5, 4.7 and 5,000 to earn some premium after a blow-off high. Capital efficiency. If you have unlimited losses, you have to hold far larger sums down, and we've done that in great detail. So this is positive. It is positive, but a warning that you can get top outs.
Gold and silver are approaching another critical turning point as powerful technical signals begin to reshape the outlook for precious metals. After months of intense volatility and sharp price movements, the market appears to be entering a new phase where momentum could accelerate significantly. Technical patterns are now suggesting that silver in particular may have much more room to run if key resistance levels continue to break. Francis Hunt, a seasoned trader, market analyst, and founder of the Market Sniper strategy, believes investors should pay close attention to what these charts are revealing. While the setup could lead to a major upside move, Hunt warns that extreme volatility will remain a defining feature of the market. According to his analysis, the next phase could bring powerful rallies alongside sudden and aggressive pullbacks, creating both enormous opportunities and serious risks for traders who are caught on the wrong side of the move.
So gold has broken, and that was the triggering event. And on Wednesday, it did occur. So on that YouTube where we said, maybe by up to midweek next week, meaning today, that would potentially happen, and it has. It is a triggering event. And it is also, because of the smaller 4-hour, a triggering of the larger 3 impulse falling wedge, as brought to you and described only by us. You don't hear that language anywhere else. And discussed here on this YouTube channel, that saved some people from going long with Gaza Savage at the second high and getting their silver socks blown off when it turned around and puked to the downside again. I'm sure he won't be criticizing us again soon because we never forget. We come from Africa. We're an elephant. We never forget. You cross us, we never forget. We will come and find you. We will embarrass you with our big trunk. Anyway, having too much fun. It always feels better on a winning day, even for me, 35 years into this game. But it was uncertain, and we could have been wrong. It was uncertain, and as ever, we can be wrong. And even those others that have been wrong, we forgive them. Just don't talk smack on us. So this is a beginning of people have to be careful now. It isn't reversion to moon 121 in a week's time, new all-time highs. We've also warned, and this is where people get real angry, like, how can you say the two same things? How can you say the same two things? We've also warned that on a 6-month time frame, people have to bear in mind on the longer term, you had a very high volatility 6 months. We have said the exact same, and we say it again. We haven't walked away from it. This is the end of the one-way, largely downside, and a potential for some relief rally for gold and silver. But it does not mean that we are saying to you 100% back to moon, December calls at 20K are going to pay. We've already spoken at length about why people will sell far out of the money calls to get 90% of their capital back and have a much smaller margin hold when they have been writing calls at 4.5, 4.7 and 5,000 to earn some premium after a blow-off high. Capital efficiency. If you have unlimited losses, you have to hold far larger sums down, and we've done that in great detail. So this is positive. It is positive, but a warning that you can get top outs. Here was a shooting star with a follow-up shooting star and a kind of one body a bit big. Eventually, you got the sell. You can get another shooting star. You can go higher again one more time. You can go higher again a third time and get rejection a third time, and then eventually sell off. There's a lot of things that can happen, but it is a little bit of a warning when it is such high volatility. So we could trade up as part of this, but it is still possible that by December you've traded back down on a demand-destroying event, bedwet October crash in the private credit market, private equity, dragging in insurers, dragging in reinsurers, lots of shady little offshore entities that are reinsurer companies only for private credit companies. Meta's Blue Owl that can only do business with it with very unpreferential terms and will be its toxic bank for building out data centers. All forms of skullduggery by the same criminals are continuing, and we can't tell you as and when that will be allowed to fall. But let me tell you, there are real signs of distress. There are real signs of distress in the US bond market, with the dollar going down and the bond market going up in yield terms, down in valuation terms. That's not something that's supposed to happen. Real sign of distress. Similar levels of that distress in the Japanese markets, the two most indebted countries, bond yields going up. We started talking about that in 2021, shortly after we'd called at the end of 2020, the TLT short for the US and the short of the US bond markets. And those things can intervene and lead to even good stuff being sold. Please bear this in mind. We are maintaining two ideas simultaneously that both potentially have some potential to be accurate. So one is on one time frame and the other's on a far larger time frame. That doesn't mean we're talking out of both sides of our mouth. It means we are maintaining the possibility of multiple scenario costs that might be contradictory to some degree, but could actually both happen and could actually have one happen and one be invalidated. So we will see and we will find out, but we're monitoring it. This is to keep you from losing your mind in new bull, max leverage, make back everything you lost because you didn't sell when we sold. Real method matters, not losing your head and getting dopamine addicted because you've got some semi-big numbers coming your way for the first time in a while are very, very important. Mental self-awareness, observation of self is a higher ability for people that have manifested and expanded their IQ and EQ. So please be aware of these things. You must maintain them. So a bit of a calmer message for you. Don't wail in at the highs. You could get rinsed. It isn't just plain mega moon straight line bull. We have just made the target, I think, of this upside HVF. Let's have a look at that on the 4-hour frame. So we clean up face, put it in. Of the first interim has been made, a little bit of pushback. So first of all, 4,312 will be a first point of call, whereafter a meaningful pullback may occur. It might be all there is, and it might come back down and make a new low, and the 6-month B is true as well. It might not. We don't know. First setup implies overperformance. We will still close some of our positions at the 4,312 level. We will still close. Now, the title said, white metals showed you first. And in this instance, they did. They are not the gold, they are not the God markets of precious metals. Typically, that's gold.
Cracks are beginning to appear across global financial markets, raising concerns about growing economic instability. In the United States, the bond market is showing unusual signs of stress. The dollar is weakening while treasury yields are moving higher, a combination that could signal deeper problems beneath the surface. Similar pressures are also emerging in Japan, one of the world's most heavily indebted economies. Meanwhile, gold continues to attract attention. In the short term, the next upside target could be around $4,300, although a significant pullback may occur once that level is reached. Looking further ahead, the bigger concern is a potential liquidity and credit shock later this year. An expected October disruption in private equity and private credit could create problems for insurers, reinsurers, and parts of the shadow banking system.
So The key part that eventually worked in our favor, did make us a bit nervous at points. It hasn't all been plain sailing, but we're very happy to be in the pound seat now. This low over here was your low for gold against the dollar. Of course, the dollar's been part of the story to itself. Very strong up legs. We warned, and I was just updating and reminding the community of this, while more grindy on the down legs. Strong up legs. Those are the blue lines that I'm showing you. What you can see is, alternatively, in terms of the downside, let's go TG pink, you're getting these falling wedge, more elongated, squeezing volatility. The lower you come, the more the buying starts to come in and starts to slow the whole process down. Under 4K all day long, please, we shall buy. And another falling wedge on a smaller time frame, on a smaller scale, sorry, for the second impulse to the down leg. Again, the minute coming 4K, stronger we will buy. You barely got to hold 4K very long. And more finally, although slightly scary, was this choppy volatility nowhere near the 4K. Stops at the 3996 while we were loading up on entries, turned out very well. You wake up to good news. Who likes waking up to good news? Yes. It's not, your hard on isn't the only hard on, I say, on mornings like these, and it feels great. You're making some profits and you're getting away with some funds. We are also in the log scale, and we can reduce there. That is pointing to the fact that you had 3 impulses for downside. We were challenged on our opinion and told that we had, what was it again? Mental recency bias by somebody else when we suggested, no, you might sell off another time. You might sell off another time. We said recency bias because second impulse, big bloated second impulse. This is gold against the USD. You have now, with an upside HVF fractal that is on around a 4-hour time frame, broken a far larger continuation pattern, which is also embracing the general downs trend that you've had in gold, and saying ending for now being one-way traffic generally for the downside. You hit 5,600, and at the lows over here, you're at the 3,940s. The 4,000 level has been an absolutely integral level. You see the blue line there. It is keep on keeping on, keep testing and running rejection, testing and running rejection. Let's get our big pink crayon and tell you all about it. You were rejecting there. You ran but rejected, close support, ran but rejected, ran but rejected, ran but rejected. Tested to the downside, made me kind of nervous and skittish a little bit about everything, and then turned around and broke to the upside. This is not a fat candle yet. Live trading day with us on Friday. Click the link if you want to have a try before you buy to see what we all talk about. Big data, live, non-farm payroll numbers on Friday, after a period where the dollar has been rather weak. And what might we get? There's concerns for inflation. Oh dear, the CPI reduction to 3.5%, of course, occurred after oil crashed down to 60. Then they jacked it up to 88. Then there's war, then there's peace, then there's war, then there's peace, then there's lies, damn lies. Keep a little bit of theater going. They need a front run and cacocracy, make billions for themselves, pumping and dumping the oil and front running the consequences of that, because they've got a clear criminal of cacocracy that is helping his Zio friends and his Zio self to make a whole bunch of money, all at your cost while bouncing the ping pong ball. Don't try trade that. There's no way of knowing unless you are seeing a technical pattern. However, the down move in precious metals, in oil recently, yesterday, I believe it was, we'll go and have a look later, and the falling wedge making its third impulse. First impulse, the big trend that we've shown you many times before with a little schizo move to the up and down here. Impulse 1, long, lengthy, bloated, grinding second impulse. Broke a lot of people's balls. Our friend Gaza missed the head and shoulder over here, and he called us out for mental recency bias, only for it to go a whole bunch lower down to 4K. There was a head and shoulders there on silver. And then you've bottomed out at the 4K level, and you are now moving on up. This thin candle for now, because we've only had Monday, Tuesday, and part of Wednesday's volume. Will it fatten up? It will be interesting to see. Volume verifies, but volatility, the squeeze, H, V, F, H is me, V is volatility, F is the funneling process. You made your protein shakes, you used the funnel, the squeeze that gets it into the tight spaces so that it can later expand, is where you get asymmetric reward with super tight risk, which allows for big numbers to be made. We'll have a look at some big numbers in a bit. So overall, we've been positioning for this. Let's go and have a look at it on the lower time frame. This is not only a triggering event of a 4-hourly upside HVF, as warned on Friday by me to you. That's right.
Francis Hunt's analysis suggests that gold may finally be breaking out of the prolonged downward trend that has dominated the market. He points to the repeated failures around the important $4,000 level, where gold repeatedly found support and attracted buyers. The key idea behind his analysis is that periods of tightening volatility can eventually lead to a much larger price move. Hunt believes gold has spent a long time moving through a series of downward impulses, but the latest technical breakout could signal that the sellers are losing control. His broader message is that the market may now be shifting from a period dominated by selling pressure toward a new phase of potential upside momentum. But rather than chasing the market blindly, Hunt believes traders should pay attention to price patterns, volatility, and confirmation from trading volume. For investors, the takeaway is simple. Gold's recent move could be more than just a short-term bounce, but the market still needs to prove that this breakout can continue. With major economic data and inflation numbers ahead, the coming weeks could bring much larger price swings. As Hunt's analysis shows, understanding the setup and managing risk may be just as important as predicting the direction of the next move.